just don't make a question them too complex.
There's no question, bro. You're gonna ask me the question. I'm gonna teach you. And when I ask you stuff, just try your best. There's no worry. Alright, what's going on, gang? We here live. Roach Gang class, part 1. Let's go. Here with my student, what did they call you, sir?
Michael,
yeah. aka JJ, my little brother. Yeah. Alright, bro. So, again, when I'm on this futures trading journey, I'm here to teach and put them on everything I know. Alright, bro. So, we're first going to start with knowing what trading is. Do you know what trading is?
Trading is like...
Just give me your best idea, whatever you got.
Best idea?
Yeah.
Trading is like selling and buying a stock share.
Yeah, it could be a stock, share, index, anything. Remember, we trade the NASDAQ and the S&P, so it's not technically a stock, but it's buying and selling in a matter of either seconds, weeks, months, year. It all depends, right? Different type of trading. What we do is day trading. Yeah. So we basically buy, or then we sell in maybe a few minutes, right? Or we sell and then we buy in a few minutes. And the whole goal is, right? If we're going to buy, what are we looking for? We're trying to buy it because we think, for instance, the price is at 3, and we think price is going to go to 6. That's the time we buy, right?
Yeah.
And it's basically now you have to do the opposite when you're trying to sell.
Yeah.
Price is at 6, and you think it's going to go down to 3, and you sell. Now you want to think of it very literal as well, especially while you're trading. For you to be a buyer, what must there be?
The value on the product.
Yeah, value. And then there must be sellers.
Yeah.
And for you to be a seller,
must be buyers.
There must be buyers. So it all's in tune. So remember that on a very clear, calm, psychological level. So for instance, it's not like you're trying to trap people all the time, but it kinda is, because you're going against what they're doing at the time. And always remember, for every time you push a buy button, they have to match it with somebody that's selling at the same exact time. So where you think the price is gonna go up, that person is thinking the price is going down right there. And for every time you sell, it's the same thing. Where you think price is going down, that person thinks price is going up. So again, there's only 2 things that can happen. End up on the right side of probability or the wrong side. Yeah. It got nothing to do with you, right?
True.
Nothing to do with you. Alright. So, let's start a little bit with candles. Remember, you want to write down as much as you can, right? Yeah. This is bullish. This is bearish. Alright, for bullish candles, right?
Yeah.
It starts like this. This is the open right here. Right? So you can label that the open. Now, remember, candles are just telling us what? Information of price traveling. Right? It is simply telling you, hey, price went from here to here, then back down here, or it's just, it's just giving you information. So the bullish candles usually are telling you where price moved up from. It moved from here up. Bearish candles are telling you it's moving down, right? So this could be the open, right? And then this candle could go up here, and then this could be the close. Now for the bearish candle is the opposite, right?
Yeah.
So we'll leave the bullish ones blank and the bearish ones colored in, right, for the red.
Yeah.
So for the bearish, we're going to say this
at top
is the open and the close is at the bottom. Exactly. Now what we can also say is, right, still a bullish candle, still the open, still the close, and there's a wick there. What is this saying? This is saying this is the low,
that's the high,
and this is the high. And this is the opposite, right? You got like this, open, close, this, and this is the high, right?
Yeah, and
this is the lowest point. So again, just information, nothing crazy, right? Just information in the candles. It ain't telling you nothing crazy, right? What you want to then notice, right? So you know which candle is telling you what direction. So this would be telling you the bullish candle is telling you what?
Going up.
Price is going up, right? And the bearish candle is telling you what?
Price is going down.
Price is going down, right? Okay. Now, when you open a chart, it will look something like this. All right?
Yeah.
Well, let me actually erase this first. Man, what is wet over here? Something is wet. Okay. So you open the chart, you got candles like this, candles like this. Then all of a sudden you got a candle like this. Please, don't worry about my drawings.
Not good.
Terrible. Right? And let's keep drawing a little more. All right. So when you open the chart looks like this, right?
Yeah.
At the bottom, there will be the time, right?
Yeah.
So you remember like a chart, like X and Y axis, right? So the Y, this is the X right here, the time, the Y, you got
Price.
the price, exactly. So over here you could say 0, 1, 2, 3, 4, 5, right?
Yeah. And then the CMP better.
Right. Well, this is only going to be the time here.
Yeah,
So it would be like, so let's say what time we start trading, 8:30, 9, 9:30, right? And
Go ahead.
keep going. What you want to right away look at on the chart and really recognize is something I call the floor and the ceiling. People call it support and resistance, right? So for your code name, support, call that the floor. Resistance,
Call that the ceiling.
that's the ceiling, right?
Yeah.
So you come on here and you just want to find out what's going on. Okay, so I see price was going up, and it turned back right here. Then price went up again, almost to the exact same spot, and turned back. What is that telling you? There's something holding it right here, right?
Yeah.
There's something keeping it from going up. Now think about, yeah, exactly. Think about if you were to be in the place, and you just jump, damn, boom, again,
Ceiling.
and you jump again, boom. You'd be like, damn, probably shouldn't jump over here, there, right?
Yeah.
Probably gonna look for this to be the place where they can't really pass right now. So now if I see that 1, 2, I usually like the third or the second time to then take action, because it's already giving me information. I know it turned back here and it turned back here. Okay, what happens when it comes here, right? Just like this right here now. Price was going down, then all of a sudden it turned back up. Went down, turned back up. Right, so that again,
Floor.
that's the floor. So ceiling, floor, right?
Yeah.
Why do we want to look for this? Remember, trading is basically already like we're driving in the middle of nowhere, where we have no idea where we're going. These type of things will be as your GPS, right? If I get in along, where are you gonna get out? Look to get out. Where the ceiling is, right? Now, matter if it's a small ceiling, big ceiling, I'm always looking, right? Because there could have been a little spot here where it turned down and then went up and then turned down again. I still would have to treat that with respect, right?
Yeah.
I gotta pay attention to it. So I'm like, hey, maybe I get out there first, but really my true target is here, right? So now, for instance, over here, we got 1, 2, 3, right?
Yeah.
If I see price start going up here like this, and it's in our setup, because we're going to learn what our setup is, and we get in, let's say we get in the trade right here, right? Entrance is right there, stop loss right here, where would we look to take this to?
When we reach our ceiling, forward.
Back to the ceiling, right?
Yeah.
Or a little bit before, because we know when it gets there, it usually gets slapped. So a little bit before the ceiling, we're looking to get out. If it breaks out, great. We keep following it. But this is really our target right here.
Yeah.
Right? Now let's say price does go up here. Then all of a sudden we see this again.
Gotcha.
What are we looking to do? If we do, let's say we do, then get in the short right here. We're looking to take it back to the floor, right?
Yeah.
So you see, these are what really help you with your direction, right? We need to know where, basically we want to know the path to least resistance, so we must know where the resistance is and where the support is, because it's resistance either way, right? It's either resistance that it can't go down or resistance that it can't go up. So we want to find that out all the time. All the time. Where's the closest in? Where's the closest floor?
Yeah.
Where's the farthest in? Where's the farthest floor? Because if I'm taking a trade and it busts through this floor, shoot, all right, I'm not gonna, I'm gonna keep trailing, but then I gotta find out where's the next one then.
Yeah, before I slap it.
Right, because you could be trailing, and all of a sudden it go up. You don't know what's going on because you're not paying attention to where the ceiling and where the floor is.
Sure.
You understand? I also want to get into this right here, these type of bars. So we see the bullish bars go into here, right?
Uh-huh.
And then all of a sudden we see a wick right here. See this wick?
Yeah.
You have to remember this wick started off like this. Then all of a sudden, I call it getting Pac-Man. Remember Pac-Man?
Yeah.
Gets eaten, right?
Yeah.
So this bar was like this. Then all of a sudden, they basically Pac-Man this out right here. Terrible drawing, but you get the idea. They ate this right here, right?
Yeah. Shrinking done.
What is that? That's telling me, oh shoot, the buyers were running in charge before, but hold on. The bears are here, right?
Yeah.
And you remember, like we said, the bulls and the bears.
Yeah.
You remember the quick example. Remember the bulls have the horns that go up and they strike up, right? Right? Say this is a bull, he's going to strike up, right, with his horns. And the bears down at the ground, first and foremost, and they like to strike down.
With the claws.
Right, with the claw down.
Yeah.
See what I'm saying? So think of it that way. So now all of a sudden you gotta think these bears were trying to go up in there and the bears get them a slap. You have to be like, okay, let me see what's going on there. Then if that's in the setup, which we're gonna learn, I would then enter one underneath this bar, put my stop loss one tick above here. And I'm looking for it to go down.
Yeah.
Because this is the good signal bar. We call these signal bars. Again, signal bars kind of like your indicators, right?
Navigation.
Right. Again, always think of it as GPS. It went from the floor to the ceiling.
And then drop back.
I know for a chance it could then go back to the floor or it could get rejected off the ceiling, right?
Mm-hmm.
I want to see proof. This or signal or, an indication that has happened. This is a great indication. Showed you that the bulls even tried to go up in there, thought they were going to pass it, and then the bear said, no, not today. Slap back down. Now, same thing we could do with over here, right? See, that's the bar. Start like that. Then all of a sudden, you see something like this. And these are, again, special type of bars, right? I will tell you the name in a second, which we will go over one day. But enter one stop here, one stop here. These are what we call hammers. This is basically what we call a shooting star. And this is a hammer. These you do not want to play with. Like, if I see a hammer, my thought process to go short, not really here right now. I know the shorts just got trapped right here. And the buy is just a showing strength right here. Yeah. Same thing here. I see the shooting star. Whoa. Buying is definitely not a good idea right here. Right? Exactly. And remember, we don't technically stick to a bias. Right? We just go with price action. And price action is basically what we were just doing. You see how we can talk about what has happened to the bar, right? And what is going on, and if the buyers are winning or the sellers are in charge. We always want to know that. That's price action. Because once you start getting used to looking at the candles, you're going to be able to be like, okay, that's a bullish candle. Yeah, right. And then all of a sudden you see a bearish candle. Oh, okay, bears are coming in. Little bullish candle, all right, bears are getting small. Then you see a shooting star. You're like, okay, bears are in, you know?
Again.
And that's price action. That's the language of price action. You're just understanding what the candles are telling you. Understand where it should be going on. Because we don't know. Don't ever forget, we don't know nothing. We don't know nothing. It's like I'm telling you a bunch of if so, then maybes up here, right? Okay. So, let me then dive into what I call, so basically, again, another indicator that helps us, or something that can lead us to trying to have a better guess of where price is going. Something called the EMA. This is estimated moving average. And the EMAs, you see it on my chart, the lines. Remember, mine is yellow. That's the 21 EMA. And then I have another EMA that is blue. That's the 9. So what these are telling you is the estimated price that the chart should go to or be around. So now this estimated price, you have to think of it like a magnet. If price is all the way up here and the line is down here, not for too long. This is going to snap back here. This is always like equilibrium, where this is always true price. Around these two, around these EMAs, always true price. Same thing if you saw the thing down here. Again, this is why we don't jump in and we wait for our strategy. At any moment, this price should be the real price. So at any moment, it can just come back here in a second. So we stick to discipline. We don't know already. We don't even know if our own strategy going to work. So why would I even jump in on the random? That's like I'm rolling the dice blind in a, I don't even know, in a snake cage or something. That's even worse. Let me roll the dice so I can see at least. I know I don't know already, but let me, you know, where I have a little bit of knowledge.
What you said the EMA stand for again?
So, estimated. Moving. Average. So basically, the estimated average price, right? That should be where the candlesticks are at that time. You know? It's a guess. It's a good guess. Now, what we want to think about, right? This is 21 days, this is 9 days. If on the chart, for instance, as well, this is the 21 EMA, I'm going to just draw lines and see them as candles, right? 21 EMA, we see price coming up, price coming up, price coming up, and then all of a sudden, come down, tries to go back up again, coming back down. What is that telling you? The sellers are more in charge right now because the buyers just tried to push past the EMA and the sellers are respecting. They're saying, hey, we respect this right here. You can't come up here right now, right? The same thing if it's the other way. Price is up here, go down, come back, check it again, see it start going up. Hey, buyers are in charge. This is what we kind of use for a heat check, right? The EMA. It's a good heat check because I'm looking to sell. Why wouldn't I wait till there's other homies try to sell with me? I don't want to go in here and get jumped. I want to do the jumping. So if I'm looking to sell or buy, again, I wait for these key entry points. Key entry points that you want to write down so far, right? You got support, floor, you got resistance, ceiling, you got EMA for the heat check, right? We want to give little code names so you remember it better. You want, these are all key entry points. We're going to write them a couple times. 1, 2, 3 so far. And now, what do we also want to see from the EMAs? So remember, this is a 21, right?
Mm-hmm.
This is a 9. Closest to the day, basically, which would be 0, would be the 9, right?
Sure.
So we'd kind of give you a more tighter perspective of what's going on right now than the 21. 21 is good, but I also want another little filter for in. So remember how we went from the time, so basically the 1 hour, the 30 minute, the 15 minute, it would be like that. Like the 9 is more like a 1 minute EMA, which is good because I want to see who's respecting in the 1 minute. Exactly. The 21 is more intraday, which again, for me, that's the best one. That's the one I started with. But I started realizing sometimes price can't even break past this one, which is a good sign. If it can't get to past this one, it's definitely not gonna get this one. You just got to be a little careful. And
so
again,
21 EMA for long range and the 9 EMA
short
range.
Right. So if it blasts off the 21, boom, and then it's not touching the 9 or the 21, I'm trying to stay in the trade. I would like to stay in the trade as long as possible until I see it go up, go up, go up. Then it start breaking down. Then I get out.
Yeah.
All right. What you also want to look at for these EMAs is when they do a little crossing. Now again, we don't really look. I don't look at these EMAs for trades, or I don't wait for them to technically cross for trades because people say they lag, and I'm not looking for a straight up signal from these things. I'm looking for them to support my bias or support my trade. Right? Like before it gets to the EMA, I should already have a trade idea in mind. You know what I mean? I already recognize the structure, and I already recognize and I'm now looking for the behavior at the EMA.
Come into play.
Right. So structure, we're gonna go over right after this. But more so, like we said, EMA behavior and all that stuff, right? So now, let's say this is we'll draw a squiggly line. So this is the 21, right? Then we see the 9 come in and cross over it. That is a sign to go long. It's the same way if we see the 9.
And then the 21 go under it.
Then the 21 goes under it.
Sign for go short.
Right. Sign to go short right there.
Yeah.
Because again, and this probably wouldn't be going up, it's probably going down. See what I'm saying?
Yeah.
So again, we're using them to confirm bias, confirm all these things. Confirm trades, confirm our bias. See if, hey, maybe we should really be taking this. Or hey, probably not, right?
Yeah.
Okay. Now structure. So, still back to bullish and bearish, right? Kind of erase this little side. So, now bullish. Bullish moves are what we call uptrend. That is when you can recognize that price is clearly moving up and not moving down. Now, how do we recognize this? You want to start looking, again, price action. Say this was a low, right?
Yeah.
And this was a high. So price came from here to here. Then all of a sudden, price made a low here, and then price makes a high here. Right? So, is this low higher than this low?
No.
Yeah. Let me draw it a little lower so you can see.
Oh, yeah, that's low.
So that's the low, right?
Yeah, lower than that low.
So this low right here is higher than this, right?
Yeah.
Okay, so that's what you call high and low. This high right here is higher than this high, right? That's
lower
what you
high.
Call. Nope.
Lower high.
Now, how would this high be a lower high to this high?
Oh, no. Let me set that.
That's okay, bro. You're learning. That's a higher high. So you want to recognize when price is making higher lows, higher highs. So this is basically when price is doing something like this. remember, eventually you learn the trend line. You want to see the trend line holding it all up, right? You could basically clearly say that's going up.
Right.
That's your structure right there. You want to recognize the structure. For the downtrend, it's basically the opposite. This is the high, right? And this is the low. This is the new high. This is another low. This is a high. This high is lower than this high, right?
Yeah.
That's what you call
High or low?
lower high. How you have to pay attention. Don't rush into it. Look physically. This is a low, right?
Yeah.
This is another low. Now, this low, start with this low. This low is higher than this one, right?
Okay.
So now, literally, what is that?
That's high or low.
Like, say it to yourself. This low is higher than this low, which is then
higher low.
Higher low. This high is higher than this high, which is then
Higher high.
Higher high. See, very literal, very straightforward, right? Just like this here. This high is lower than this high, which is then
lower high.
And then now this low is lower than this low, which
lower
is
low.
All right, my boy. See what I'm saying? Now, what is that doing? So basically the same thing. I want to recognize what's happening. If I don't know what's happening, but we already don't know, let's always refrain that and always remember that. We don't know. Yeah. So, if I don't know, I'm trying to find out as much information as possible. It's like you are an investigator on the scene. You don't know none. So before you make a thing and you go bring it to your boss and say, yo, this what happened. You have to investigate everything and make sure you know everything while going, right? So now this is a clear downtrend, right? So now, let me kind of erase these so you can see. Now what are we looking for so far? We're looking for one, structure, right? We're looking for EMA behavior, which is what happens at the EMA, right? Which shows us the heat check, who's in control, who's really leading, right?
Alright.
And the structure is finding out if there are higher lows and higher highs, or there are
lower high.
Right. So that's how we find the structure. Okay, then we say price is either trending up or down. So for the bearish side, this is a downtrend. Right?
Right.
So again, we want to see this or this. We could slip something in there, which we call a trading range.
Yeah.
Which is when price is doing basically neither this or that. All price is doing is boom, 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 boom.
Yeah, why?
For a while. We don't know when it's gonna be. We don't know nothing. We just stay out of that.
So just have left it.
You just left that. If you ever, we just leave that. Really. We know how to trade a range, but we will learn that in the future. For now, stay clear of that.
Yeah.
You see that? Stay clear. Now, what I also want you to recognize, though, this is a trading range, right? AKA a barcode. You know, a barcode at the supermarket?
Yeah.
Like you talk about? Boom. Scribble. Somebody come in and scan that because you don't know the price. Yeah. we don't want to go scan that ourselves. Sure. We will let them decide. Let them either come down here, check off it, then go. Then we can say, hey, it's a downtrend. Or come up here, go up, right? But do you see anything similar between all these?
Yeah. Which one?
All of this, and this, and this. It is. They're all different, but the same. Again, this is moving up, but it's a trading range. This is moving down, but it really is a trading range. And why I want you to know that is because this is a ceiling, right? And this is a floor. It is the same way. This is a floor, and this is a ceiling. Same exact way, right? Same exact way.
Right.
So you see how Everything is in everything.
Yeah.
It is all the same. It is. You just have to now recognize the movement, where to, how to, and how you're gonna get there. When to, exactly. Now, let's start with this now. This is now gonna be somewhat of our strategy.
Yeah.
The two-legged pullback. Now, this is coming down. You have all this already?
Yeah, right.
Yeah, good. I'll leave it up. But this is what we call human psychology, basically strategy.
Mm-hmm.
Human beings are known to do things in twos.
Right.
If I try something once, I'll try it again. Me, I'm trying till I'm dead. I'm just a different. We're trying till we're dead. Different breed, right?
Mm-hmm.
But a normal person, if they're really trying, and they will try again. After that, they're gonna give up. You see, if they do try a third time, and they fail, oh man, that's really gonna be tough. You understand? So
the last thing.
They just gave everything they got, and now they're definitely gonna give up. You don't even have to ask.
Yeah.
So basically, what we're looking for is this type of movement, and always know, price never moves like this. And then, no, price don't do that.
Mm-hmm.
You know, there's always some kind of pullback. There's always two-legged move. There's always something.
Right.
So, and remember, everything is in everything.
Mm-hmm.
So just before we even start, there's going to be two-legged moves and two-legged moves in two-legged moves.
Right.
You start big or you start small, and you realize the big is just made up of a lot of the small.
Yeah.
Like humans.
Right.
We're all the same. Right?
Small atoms.
Small atoms mixed together. Look at my skin.
Right.
Great. It's not even here though. That's for another day. So two-legged move, just like this. We either want two-legged move like this, or we want two-legged move like this. Our job is to find out which one is correct. Again, why we want to find the structure. How do we find two-legged moves? Goes back to the candlesticks, right?
Yeah.
So now, did you get this now?
Yeah, I'm getting.
So, let's say we are, this is a chart now, right?
Yeah.
There's going to be a bearish bar right here. Right?
Mm-hmm.
Coming down all the way. So now this is a high, right? Yeah. And this is a low. What we want to start to look for is either, once we alright, so let's say we recognize the structure here.
Yeah.
Is a uptrend.
Uh-huh.
Right? So this is a low right here.
Uh-huh.
This is a high. We basically start the count from 0 here
Uh-huh.
and 0 from up here. Right?
Right.
Now, what am I looking for? I'm looking for, remember, this is the top, right?
Yeah.
This is the open, this is the close.
Yeah.
I want to see, and this is the open and close.
Yeah.
I want to see the first bar that breaks above this bar.
Uh-huh.
So when I see a bar that goes like this, boom, 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 for me, from the top right here, this is 1. Right? Keep going. That's still 1. Did you see any bars break below this bar?
No.
No. That's going to be, when that does happen, from the 0 here, that's going to be a 1.
Uh-huh.
So you understand for both ways right now. We got 0, 0, first push higher, first push lower. Now, what am I technically looking for? Right? I could be looking for, so 0 like I said, 1, I'm looking for either the second push higher or the second push lower, right? So now this is, boom, this breaks above right here. You could say this is a second entry long.
Right.
Now, you can take that. That can work out and then go back to the high, right? But for me, I like to wait. Unless I'm for sure and the EMA is right here, right? And then kills that goes up. Either way, what I'm gonna look for is the psychology, right? This right here is gonna be 2. Right?
Second entry shot.
0, 1, 2. What do we say after the second time? Always got to give up, right? Now, what am I looking for? Looking to take this long back to here. Right?
Yeah.
So now, I know it might have just been a lot, but you got to understand, we're either looking for second entry long or second entry short. Now, we're going to go over this over and over because there's multiple ways you could see it. But again, if this is going in a downtrend, would I want to be taking a second entry long? No, because it's a downtrend. So in my mind, I'm saying, hey, second entry long is supposed to fail.
So it's going to keep going up.
Right, so I'm looking for that at the EMA. Now you see where you got to switch your bias. Because now if it's an uptrend, are you looking for the second entry long to fail? No, you're trying to take that one. So you know it's back and forth. It's going back. You want to stay on the right side. You want to just be on the right side. Hey, look at the structure. Lower lows, lower highs. Okay. Looks like a downtrend to me. Higher highs, higher lows. Looks like an uptrend to me. Now I know which part of the strategy to pick. Because it's the same strategy, just when to execute which part of it. Or when to look for the trap of it, or the failure of it, or the success. So again, let's start again right here. Because this is the high, right?
Yeah.
Okay.
That way you're low.
Exactly. So what do you see here so far?
Well, first entry.
For which one? What is this? First entry?
No. That is 0.
This is 0.
Yeah.
This is 0. First entry long. Because it broke above this bar, right?
Oh, yes.
Any bars break above this bar?
Yeah.
No.
Like the one we have on right now?
Yeah, this one. No. This bar didn't break above this bar. This bar broke above this bar. So that's the first time they tried to go high since this high right here.
Okay.
This is the low. Did this bar break below this bar? Not until here, right?
Yeah.
Now this is the first entry. Short. Now, we want to see, again, key entry points. We could start with another one, which will be a trend line. Alright? So now, if a bar breaks above this bar, what count is that?
Second entry long.
Second entry long. Now, this seems to me like price is making what? This is lower than this, right? So this would kind of be a lower high. This would kind of be a lower high, right?
Yeah.
So let's say that's kind of a downtrend, right? For what else we're looking for, right? Would be, again, we gotta know when. But for now, let's say this is a downtrend. We're gonna look for either a trend line right here, or an even better, what would also be great is if there was an EMA right here too, right? Got the trend line, the EMA, you know the structure, EMA behavior, you know the trend line, right? Yeah. Right there. What we looking for? We're looking for, technically we're looking for this bar, anything that breaks under here, because this would then be a what? Second entry short.
Right.
And remember the ceiling and the floor? We always want to look at the past high as the ceiling. Mm-hmm. And we always want to look at the past low as the floor. So if I'm taking the second entry short, I'm taking it back to at least
that low.
This low. Well, I'm looking for it to go past it, but at least. Alright? Mm-hmm. What I'm also looking for is this bar to get Pac-Man, right? Mm-hmm. I want this bar to look like this after it runs into the trend line. Uh-huh. Again, so that's second entry long. Bar goes up, bar breaks under. I put my entry, 1 tick here. Put my stop loss, 1 tick here. And I'm looking for this to fail, go short, which will then equal to a second entry short. Yeah. And my, well, second entry long failure, second entry short, positive, back to the low. So I'm always looking for two-legged moves. I'm looking for two-legged moves to either success or two-legged moves failures. Let's do this again. We'll do it again where the second entry long now will be a success. Okay. So this is what?
Right.
This
is first high.
So that would be 0.
Mm-hmm.
Right?
And then my next 0 if we make it low.
So now let's say got this.
Mm-hmm. First entry.
And we got this. Then let's say we have a trend line right here and an EMA right here. So, and then for the sake of it, let's finish drawing this over here. So you kind of get some structure. Alright? Mm-hmm. So, we could say, just so we could say, we could restart the count here, because it's 0. Let's just say this was already a second entry, right? Mm-hmm. But just to give you an idea, you see this low, this low is higher than that one, right? So what are you seeing so far?
One low, high. You know what I'm saying? One higher, low, one higher, low.
There you go. And then this high, let's just say the high was right here, is higher than this high.
Higher.
Right? So again, I just wanna get on the right track to see what's going on. Which way should I be getting in? Yeah. So I see high highs and high lows. I'm not looking to go short. I see an EMA right there. I'm definitely not. It keeps holding it. I'm definitely not looking to go short. So we have first entry. So what am I gonna take right here? Is most likely the second entry long. When it breaks above this bar, second entry long,
we come back to the high.
Back to the high, at least, because it's making higher highs and higher lows. So I'm expecting price to keep doing the same. Take this high out, make a higher high. Leave this lower low and then make a higher low and keep going up. You know what I'm saying? On the right track. I just want to be on the right side. Alright? And then always remember, again, we got a push. This is called a pullback. We got another push.
So two-legged pullback.
Two-legged pullback. Then we got a push, pullback, push. Over and over again. Right? You either want to get on this to take it short, or you either want to see the failure of this, take it back longer. You either want to get on this, take it back up, or you either want to get on this, say it's going to fail, and take out that. Two-legged pullback everywhere. Everywhere. You got any questions so far?
No. Yeah.
How's it looking though?
Look good. I understand it so far.
Not difficult, right?
Right.
I'm just looking for bars that break under bars or break above bars. Because this is going down right here. This was the last high.
Yeah.
Do you see a first entry long anywhere yet?
No.
Why is that?
Cause no bar no break above. No.
Exactly.
Like
So
no try to reach it high.
exactly. So I'm constantly watching for bars to break above and below.
Yeah.
Price action. You're reading the price action.
Yeah.
Right? This keeps dropping here. Still any first entry?
No.
What about now?
Yeah, try if you broke above that the bar there.
So what is that?
So first entry.
First entry what?
Long.
There you go. First entry long. All of a sudden now, we have a 0, right? 0. Just to keep track.
So that at the high and that at the low.
Exactly. Just to keep track. And remember, this is happening all the time. Over and over. Like, there could have been a chart all the way up here. And this could just be a bottom section.
Right.
But we still...
You still a make one.
Right. It's still keep track of it. Still keep track of it. Okay. See anything different yet?
No. Still I go.
What about now?
Yeah, because I try if you broke under the bar again, so it's gonna make one second entry short.
Where did you see the first entry short?
No.
Yeah.
Oh, that's the first entry.
There you go. You get it. You're gonna take it. Like you're gonna get it, bro. First entry, short. That's how you want to make sure you say it. First entry long, first entry short. Keep your count right. Keep your count right, right?
Alright, we will draw that so that we can kiss him back.
Bad man thing. 2 Jamaican sniper come phone.
Right.
Well, him call himself the wolf. The sniper though.
As a predator.
As a bush predator.
Still I go up. Then try to break back lower.
Yep.
Right. So it's at the first entry.
Remember, we're just giving you a little preview roundup of all the trading stuff. Then we're going to go into each section individually, right?
Yeah.
We're going to spend the whole day one day on structure. And we're going to spend the whole day on EMA behavior. Two-legged pullback trend line. And this is the roundabout.
Yeah.
So imagine me sitting here and I'm looking at all these things. I'm looking at all these things on each chart.
Yeah.
Remember, I break it down on the timeline, right?
Mm-hmm.
So I'm looking from basically the 4 hour to the 1 hour, right?
Mm-hmm.
To the 15 or the 30 minute. I'm looking at the 5 minute, and I'm looking at the 1 or the 3 minute. But think about how I'm looking for this on each and every one of them.
Right.
Same time.
Same time.
Because if I see a two-legged pullback about to fail on the 4 hour or the hour, hey, that's a good look. That means it's supposed to drop for another 4 hours or 1 hour.
Yeah.
Now let me zoom in on the 5 minute to see have a good entry to see where the two-legged pullback is going to fail there, right? And then even closer, if I want to get even deeper, look at the 1 minute, 3 minute. Where what am I looking for? If I'm seeing a two-legged pullback to go short, I'm automatically looking on the 1 minute for lower highs and lower lows. Right? As if I was looking for it to go up, I would be looking for higher highs and higher lows on the 1 minute. So you see how it's reversed? I want to see momentum building from here, 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 confirmation here.
I'm still gone.
I want it all confirmed.
And then I want to start all over again.
Well, it all depends. If I get it all confirmed going down, I know my bias. I'm most likely good. Again, I don't care if I'm wrong.
But if you fail, I look for you happen again.
Right. And again, the same thing if I'm looking for it to go up, right? I want all of them to be aligning, or most of them.
Right.
Right? Now we over here. Still, you good? You drew that?
Yeah, man.
Okay. So I have the high, right? I have the low.
Mm-hmm.
What is this?
Wait, first entry long.
This is?
First entry short.
Okay. Anything different yet?
No.
Anything different?
No.
What if you see a bar starts going here?
Like one second entry long.
Okay.
Cause you try to broke past that one.
Right. Alright? So maybe it's not a big second entry long.
Yeah.
Then all of a sudden you see this. What is that? Count from the bottom. That's why you count.
0, 1, 2. One second entry short again.
Exactly. See why you count?
Mm-hmm.
See why I have the numbers on my chart?
Yeah.
So that's the second entry. Okay, some people went long and took this too early. Some people went short now a little bit too early because look at this. This is still a high and low, right? Now when this fails, I want to enter one tick here, put my stop loss one tick here, look for them to come take out.
Not the high there.
Over and over again. Some work, some don't work.
Right.
We gotta pick and choose and find the one with the most confluence. Confluence, all of these things are lining up. Right?
Yeah.
Now, the last thing we do have to worry about, risk management. Or risk to reward. Now, this is called our stop loss. Let's say I'm about to enter a trade on this bar, right? When I enter, I want to enter one tick below here. This is called my stop order. Alright? And then I also want to protect myself in case I'm wrong. Once again, like we always get wrong, right?
Yeah.
So we put the stop loss right here.
So if you start come back up, you lock it in and keep it safe.
Well, if price doesn't break below here, just come up here, it stops us out.
Yeah, so
that's fine. I'll be minus 260. Instead of it keep going, then I'm minus 500, right? I want to get out.
Yeah.
If I'm wrong, I want to get out right away.
Right.
I'm not here to sit down and see if it go back down. If it go back down, good, I could get back in again. Why am I going to sit here? Let it go to 500.
Sure.
100, 200, I'm out, bro. I'm ready to be out. I'm ready. I'm wrong.
No, I lose. No.
Yeah, it shouldn't be coming up, so I'm wrong. If it come back up and then it go down, okay, I should be able to recover that little loss.
Yeah.